Hi, my name is Jenny. I am a partner at Latham and Watkins, and I refer to myself as a fintech utility player. And I work a lot in the crypto space, doing various technology and regulatory items. I am joined here by David Treat, Senior Managing Director and Global Metaverse Continuum Group Lead at Accenture, and also Board Chair of the Global Blockchain Business Council. Jennifer Lassiter, Executive Director at the Digital Dollar Project. Heidi Pease, Head of Investment Products at Wave Financial. Matt Homer, Executive in Residence at NYCA Partners. And Imran Khan, Executive Vice President of Partnerships at Bitt. And we have a really great set of questions here and discussions. I understand that everybody on the panel knows each other and has spoken about this before, so we're going to try and take it in maybe a few different directions. I've got a list of questions here. If we don't get through all the questions, that is totally fine. So I will now start us off with Jennifer. What do you see are the key issues today affecting financial inclusion? And in particular, are those issues different in different countries?
Great question. Lovely to be here. Hi, everyone. So there was a panel, maybe 2 panels ago, that was talking about the gender equity gap that exists, right? And how we were using blockchain to tackle a challenge there. And Marcina Tillman, I wrote this down because I thought it was quite powerful, said, this won't change if we don't acknowledge the problem and proactively solve for it. So I'll use that to kick off, which is just to say, I want to set our conversation. I want to ground it in some statistics that were released by the World Bank's Global Findex database earlier this year. These numbers reflect 2021 data collection, but of course are the first set of numbers we've had since COVID was introduced into our world. So just to set the stage, as the World Bank talks about the Findex, they call out financial inclusion as an enabler of 7 out of 17 sustainable development goals. The G20 has implemented principles for digital financial inclusion, or as announced or re-announced their intention to implement. And they consider financial inclusion a key enabler to reduce extreme poverty and boost shared prosperity. So to the numbers, right? This year, they talked about account ownership. This was where I think we saw a lot of the jump, and the World Bank started to draw conclusions with the digitization of the financial ecosystem. So in their statistics, they reported 39% of lower income communities are banked, have access to banking products. 62% low to middle income, 84% upper to middle income, and 96% high income communities are banked. The global average is 76%. That's up from 68% in 2017. We've seen a 50% increase in access to bank accounts in the past 10 years. And developing countries have increased 71% within that 10-year period. So those are all very positive statistics. I think a lot of it was born out of some not so positive global activity, but it is important to remember that 1.4 billion people remain unbanked, and of those folks, most of them are low middle income countries, and figuring out how they use money, how they access finance is quite critical as we start developing what the future will look like. So with all of those statistics in mind, I will just say, yes, I think I think there is a pathway here for financial inclusion. I think it's incredibly nuanced by economy. We have kind of digital currency experts across the full suite of digital currencies up here. And I think all of the digital currencies that are available to us now will play a role. I think the biggest step is access to an account or to a product. And I think as you get into the numbers and you start to look at what has enabled the jump so significantly in the past few years, you will see that it is a change in terms of digital access, both in financial product and digital connectivity. So I'll stop there. Heidi, do you want to pick up? Great.
Thank you so much. Thank you so much, Jennifer, and thank you for having me. Great statistics. I love data. I just want to add a little bit to that as well. Something that I find that's interesting is how do we define financial inclusion? And if I take a look at a just basic definition of financial inclusion, that is the availability and equality to access financial services. So we did speak about the unbanked and the underbanked, which is critically important. But there's also a greater part of society here in the United States, all around the world, that don't have that equal access to financial services. If I can use the US as an example, only 10% of the population are considered accredited investors, and 1.5% of the population is a qualified investor, which basically means that 90% of the rest of society here in the United States is excluded from financial products, some unique financial products, such as VC funds, fractional ownership of securities, and so forth. And that doesn't even address the younger generations today that are graduating from colleges and universities. Either maybe they're not going to school because of the cost of education, or they've graduated and they have tremendously high debt and they don't qualify, and they're also facing unsurmountable interest rates and inflation. So that then is also giving them a lack of access to what we would have considered traditional financial services, like a mortgage loan. What does that mean in blockchain and distributed ledger technology? We're starting to see some opportunities open up. Now, I'm not saying that these are perfect solutions, and I think we still need a lot of regulation. But what fathoms, I just don't understand, is anybody in the United States, here in this country, can get a second mortgage and purchase a lottery ticket. But not anybody, the 90% of the rest of the population don't necessarily have an opportunity to invest in a startup where there's tremendous opportunity. Yes, there's risk, but tremendous opportunity for growth. So we're seeing, through the use of tokenization, cryptocurrency, NFTs to an extent, this opening up of opportunities for the 90% of the population here and then all around the world to access these potential growth opportunities. I also wanted to say really quickly about the opportunity for globalization. I think most of us in this room, and possibly who are watching, if they are involved with blockchain at all, and I have met thousands of startups, I have not met one startup that is centralized, where the entire staff and team is somewhere in some city. It's usually a distributed community, bringing in talent from all around the world. Now, the opportunities are still not perfect, and there's still that we need to fix and provide for. And I'd love to hear from other people on the panel, but I have never seen where there's an opportunity for someone around the world to help start or join a project. It's not just limited to people that are in Northern California and Silicon Valley. So a lot of I have a lot of optimism in this space for potential access.
If I can, I'll pick up on that. I think there's another facet to lay on top of that, which is, Jen's statistics, right? There's another, statistic from the World Bank, which complements it and explains a lot of it, which is there are more than 1 billion people in this world who don't have access to any form of recognizable identity. And so in our ever increasing digital world, and with all the innovation that we're all driving here, we run the deep risk of making it much worse. Because we're just going to make access to our digital systems that much harder if you can't solve for, and Jen, you brought up in the last panel, I think it's brilliant, right? That at the core of it is you need, access to our digital world requires some form of recognizable digital identity. It's effective, lovable, protects all of the the dynamics of that go along with it of good digital identity. But the other dynamic that's really important to recognize is those 1.4 billion people are buying and selling things every day, right? They're out there because you don't actually have to be onboarded to financial services to use physical cash, right? And so as we think about the innovation around what is the digital form of physical cash to be able to help us navigate the digital world as more effectively, let's say, than we can navigate the physical world with physical cash, and the fact that it's a public good. No one needs to be trained how to use it. No one needs to be onboarded to use it. There are certainly challenges with it, but using that kind of marker of the two-sided issue of the extending gap between the haves and have-nots in our digital world, full stop, and then the potential for us to innovate, ways to create a foundational currency, that can be as effective as physical cash is, because it doesn't require maybe the same degree of onboarding and AML KYC that it does to set up a bank account and get all of the additional services that obviously help someone thrive economically. So we almost need to bifurcate the conversation between those that are fully excluded from the digital world, and how do we serve them, and how do we get them into a digital context, and then once we do, how do we address those challenges of gender inequality, financial inclusion, and the like.
Yeah, and
I need to add something too. So I like the topic of what is financial inclusion. Thanks for pulling out the definition. We need to really broaden it beyond, as you said, what banking services are available at a basic level, which is depositing your money. But beyond that, you need to think about the merchants, that those 1.4 billion people that are going around carrying out their business day to day, selling and buying things. But if they're working as a merchant, selling food on a stall on the side of a street, they've got to use their own cash to actually buy the inventory to be able to sell it. Now, why are they the ones that need to fund their business themselves, whereas the others who have better means are able to get a bank to give them a loan? Now, working strictly in the physical world really precludes them from having access to the loans that they need to really operate their business and even grow their business. So access to loans is definitely something that falls into whether you're financially included or not. There's also being able to access investment, right? When I do have this money, I want to make sure that it actually grows, and I'm not just sitting on a currency that may just reduce in purchasing power over time. And very often in some of these economies where they can't get access to loans, they can't get access to mortgages, which means they need to hoard enough money to eventually have the cash to build a portion of their home as a family, and then add to that home room by room over time. So hoarding that cash with that reduction in purchasing power, it just makes it that much more difficult for them. And finally, those people often are waiting for money to be received from relatives that are abroad. They need those financial inclusion services, right? If you can't get that at a reasonable rate, that means you're financially excluded.
So I'd like to bring up a question that I often think about, which is, what is it about distributed technology that is going to enable inclusion that wouldn't be served by something like a crowdfunding platform or a centralized lending platform? Can we talk about why DLT is the solution for all of this? And maybe Matt, I know you haven't had a chance to speak, but maybe you could talk about this.
Yeah, well, I would start by saying I don't know that it is the solution to all of this at all, right? I mean, I think that the reality of financial inclusion is that that's an area that will be solved by meeting people where they are, right? And the solutions have to be as diverse as the people that exist in the world, right? So I think that the DLT and blockchain will be an important part of the solution, but I don't think it's going to be a silver bullet. I think that and I think we've seen that recently in a few different ways, but I think stablecoins are one interesting example, right? Where people who live in countries with high inflation or other sorts of concerns. People may have read this article I read over the weekend in the New York Times about people in Lebanon. Like, people in Lebanon are going to the bank and holding up the bank with guns to pull out their own money. And so I think that you already see the potential, particularly around stablecoins. I've been spending a lot of time kind of trying to take a step back and think about, okay, what do we learn from the history of money? If you look at like the several thousand year history of money, and to me, the biggest takeaway is that the trusted ecosystems always win. It's that the most trusted financial systems are the systems that win. And those are not always the systems that are sort of, sponsored is the wrong word, but sort of that come out of sort of a government context, actually. And so I think, I mean, to answer, maybe this is sort of a cop out, but I think to answer the question, the systems that win are going to be the systems that generate trust the most from people. And in some contexts, it's absolutely going to be blockchain and DLT.
That's a great answer. Thank you.
Can I add a facet to that?
I would love you.
I would love you to. From a technical perspective, right? The dawn of modern financial services, right, started with the telegraph. It was the ability to send a message over a long distance and have an omnibus account on either side, execute a transaction. Lo and behold, 75 years later, we had none of that's changed. That we are still in a message-based architecture with two account holders on either side that are validating a transaction that happens over space and time, which of course was not the domain of physical money, right? I would hand you a $10 bill and you'd hand me a good, and that's been the physical world. And so we've been living in this message-based financial infrastructure that in our ever-increasing digital world is useless without connectivity, right? Have we all stood, or, I've been in a hurricane hit, part of the country, and the entire grid was down and I was done, right? Whatever cash I had on me was what I was going to be able to spend. Our entire financial system is useless without connectivity. One of the really interesting things about tokenization and the ability to use the capabilities that are on our phone on a battery, and we've been demonstrating with a few central banks around the world, is the offline use case. That for the first time ever, actually, we can contemplate being able to exchange value in a digital form in a valid way that once you return to connectivity, catches up with the ledger. And that is, it's a small use case. It's not, widely pervasive, but it tells the story of actually a much better architecture for a financial system that is much more resilient, can be made in a much more, secure manner. And candidly, the message-based architecture is woefully inefficient in the grand scheme of things. We've made it super fast, right? We've made it seconds for authorization, and depending on your model, minutes to days of actually settling the transaction. But if I ask a lot of my clients, and one in particular, basically said, look, I run a reconciliation business that does a bit of banking. Right, that's all they do. Right, they have a huge ops team that is constantly reconciling data because of this. And so our data inefficiency, all of the, even though it's super efficient and high throughput, it's got issues. And so there's a more modern architecture that enables us to actually build better systems. So I think that cat's out of the bag. The question is the steady progression towards that, because unchanging the plumbing of our global financial infrastructure is a gargantuan activity.
I might just add to that as well. I've been personally involved with some of the happenings in Afghanistan and helping. We were providing some blockchain training to girls' schools in Afghanistan, and unfortunately last year, we all know what happened, and a lot of the women were actually breadwinners, whether they were journalists or judges or teachers, and through the recent tumultuous situation in that country, lost access to a bank account and lost access to any kind of money, period. And the only life saving option that they had was through cryptocurrency. So that right there just is one example. You were talking about shutting down a system. You couldn't really shut down a cryptocurrency system. Now it's much more difficult once you have the crypto. Where do you go find a broker and get the local cash in the local currency? But with that said, they were still able, this was a lifeline. Until recently, there's been some changes, but that's one thing right there. Second, I would say, is the rapidity in which crypto and or digital assets can be deployed. And we saw that with fundraising initiatives for Ukraine. The Ukraine DAO being one example, of which I've got some close friends that were very involved with that, and they raised $7 million and deployed it within a couple of days. I mean, that is unheard of. And third, I would also say that DeFi, maybe some of you in the audience have some arguments about DeFi. I'd love to hear that. But DeFi itself is in many ways changing the rules, where people who may not traditionally qualify for a loan, maybe they don't have your credit score that we've seen before, but DeFi is allowing for peer-to-peer lending, and they might be looking at other options such as how long have you paid rent? Have you been timely on your rent payments? What about your phone bill? So they're looking at different credit mechanisms and metrics. Again, that's all attributed to digital ledger technology.
Okay. I'd like to ask Imran a question. I know your organization works on deployment of CBDCs, so this may be a little bit of a loaded question for you. But I'd like to know what you think and the rest of the panel about, since this is the future of money, where do you think central bank digital currencies versus stable coins that are maybe not government banked, how do you think that's going to fall? Do you think interoperability is going to preclude central bank digital currencies from really taking effect, or do you think that stable coins are going to fall by the wayside once we have a real CBDC?
Well, currently there aren't many central bank digital currency deployments globally, and the interoperability between them is something that's being actively researched and worked on, and we're all studying very closely what's being headed by the BIS and some of the central banks that are involved around that. But for now, we have a thriving stablecoin market with high values, lots of innovation and some failures that we're all learning from. And those innovations and failures and lessons learned are being extended to everything we do in technology, right? Central bank digital currencies, as well as other types of deployments that may be seen as high risk. How do you stage a deployment properly? Now, that being said, stablecoins exist. They work quite well at sending money in jurisdictions that would take very long to get to. So they are the prevalent one right now. They serve a purpose, right? Speed, low cost, sometimes getting around sanctions. But when we get to central bank digital currencies and they start adding the value of lower costs, remittances, quicker transactions between an economy, digitizing the payment systems that may be lacking from a national payment infrastructure, you start taking some of those attributes and benefits from stablecoin and moving them over to CBDCs. Now, central bank digital currencies will then have a very clear purpose once they're launched and they solve all those problems. It doesn't mean that a central bank digital currency has the goal of imitating a stablecoin. A stablecoin has other purposes. It's about pushing innovation to its limits. It's finding DeFi applications and just making cool things that could just be leveraged as learnings. I think the two will coexist. And in terms of interoperability, I do see a future, and this is something that is yet to be proven. Central bank digital currency is being an official on-ramp in some countries where there is a concern around the use of crypto in that jurisdiction. So one day I could see central bank digital currency as being the official on-ramp and off-ramp to crypto exchanges where you can go and procure those stable coins.
That's a really interesting point about official on-ramps and off-ramps, because another question that I wanted the panel to talk about is, a lot of DeFi these days is permissionless. CBDCs may end up being permissioned, but generally, where do you see the systems falling? Do you see more people adopting a permissionless system or a permissioned system? And Jennifer, I'd like to hear what you have to say about that.
Sure. First, I want to just build really quickly off of something that Imran and Heidi both said, which is central bank digital currencies are digital fiat. So when we think about the difference, right, I would argue that they are the safest, the most secure way to transact using digital fiat, right? So if you are in a situation where you've lost connectivity in a hurricane, or you're in Afghanistan and crypto is the safest place for you to be able to get funds, then you have to go and you have to look for that off-ramp. How do you cash out, right? Central bank digital currencies, I think, are a potential solution to that. There is no cash out. It is representation of that currency, that fiat currency. So I think that's important to call out. I don't think it replaces stablecoins. I also don't think CBDC solves all the problems, but I think we figure out what the appropriate use cases are for each of those digital currencies. And then I would take your question one step further, and I'm really curious what this group thinks, which is, well, I think we've started to see some countries experiment with CBDCs not using even distributed ledger technology. And really, as we think to the future and we think of interoperability, how do we achieve that if we aren't in concurrence about what architecture we're going to be using globally? And I think this is something, if we look at the reports that came out on Friday, you start to see that debate play out. The Office of Technology and Science Policy had a very nice comparison in terms of how they were thinking about DLT versus non-DLT options for central bank digital currency. So it'll be interesting to watch the interplay between the global working groups as they start to think about that architecture and then potential corresponding standards. But I'm not convinced necessarily that DLT will be the future of CBDC, and I'm curious what others think.
I'm gonna pick. So I'm gonna pick up on. I want to pick up on the maybe my two least favorite words. In the mix, which is if we could accomplish one thing as a community, it would be let's never ever say permissioned or permissionless again, because they are woefully inadequate terms. Woefully, like totally misunderstood. They don't articulate what is. I think even the last panel talked about, and I think we've talked about a couple of different dimensions. When you think about the necessity to have a high quality currency to underpin an economy or any other systemically important system, there are characteristics of that system that are required, right? That I think we could all agree to, right? Any system that's going to get rolled out at scale needs to have a phone number that my mom and dad are going to call if it goes wrong, right? Because when it hits Main Street, you need someone to be able to fix it when it goes wrong, a proper mechanism for recourse, the auditability, transparency, liability structures, and predictable modernization of the systems. And so what we should be doing is laying, and we've got a version of this, but that we all need to collectively create a version of it, which is let's lay out the framework for large scale systems, systemically important systems like money for an entire society. Let's outline the characteristics of what those systems need to be able to do. Then let's match that with the architectural patterns that can do it, right? And so using those binary terms of permission and permissionless is inane, because actually we're walking right past the deeper conversation around how do we actually have highly effective, lovable, working systems at scale. And it is not, that anyone can operate them or just one party operates them. It is much more sophisticated than that.
Well,
So
you've answered all of my remaining questions, so thank you.
And we're seeing a blending of that. A lot of enterprises that I speak with might use the quote unquote permission.
and don't throw hybrid in either, because that's just.
But depending upon what their use cases, they might use one or the other or both. So.
Yeah, I think that, David, I think to your point, I think you're talking about almost like principles, right? That we needed to agree to. And I think those are so important. But I think also, we need to realize that, we live in a context where things are constantly changing. So I think one question is what are the principles we want what value do we want our money to have? And then the second question is how do we want it to be able to evolve? And that's where, I don't think we've talked about privacy yet, but I think that's such an important area. And that's the one thing that really gives me concern around CBDC. I think you could envision a perfect, amazing CBDC, but you could also imagine a CBDC that's absolutely dystopian, right? And I think, going back to my previous comment about kind of the history of money, if you look at the history of money, it's very rare that governments have been able to resist the urge to do something that would win them some short-term gains, but ultimately cause their currency to people to lose trust in their currency, whether it's devaluing a currency or weaponizing a currency. And so I think that's really the question I have about CBDCs today is is there a way? Well, first of all, what is the role of privacy with the CBDC? And because I do think that is it's very important to have some level of privacy. And is it around transaction thresholds, or how do we set that? But also, how do we ensure that the system can't be manipulated by future leaders? And it's not hard to imagine that in a lot of different contexts, including the United States, right? That we may develop a perfect system today, and then we have new leadership 15 years from now, and they're able to kind of weaponize it in a way that that is not good for society.
Yeah, and we've been talking a lot about this outside of these four walls when it comes to OFAC and the recent sanctions issued to tornado addresses. And my concern has always been, are we going to end up with two potential chains of ETH that really underpins a lot of DeFi? And okay, there's going to be one that has a certain set of validators that accept any transaction without looking at it, and then there's going to be another that puts into place programs to block sanctions addresses. And how do we deal with that? And I think, as you said, Matt, it is a values question. So I'd be interested to hear what any of the panel has to say about that in particular, and how that is impacting how you're thinking about your development, or is it impacting it at all?
All right, I'll go. Anyone? Okay. I think this again is where I'm going to go back to that framework, right? And taking an issue like Matt raised, I think is spot on to basically say what are the privacy value, what are the privacy values of a particular community, and the platform that's going to serve that community, and they will be wildly different in the communities around our world. And so what we need to be doing as innovators and technologists and business architects as well, is providing those frameworks for those choices to match the technical configuration of the capabilities to the needs, wants, interests of the communities that they serve. And we see at the highest level, even in the central bank digital currency topics, the conversations between central banks and the consumer advocacy aspects of the input to them. If I just take the US, Europe, and China, we have three wildly different constructs around communities and what they value in their fundamental systems, right? So, in China, it's a community value to have a very high degree of government access to information, and that's part of their societal construct and the expected rules of the game there. In Europe, with GDPR and the direction of travel, of the regulations in Europe, there is broad prohibition of commercial use of data, but much more widely accepted government use of data. And in the US, we have broad prohibition or broad protections against government use of data requiring, that are constitutionally protected, but we let our commercial community and tech, seemingly run wild with all the data, free play, right? Those are three wildly different environments in which to build a system for something as fundamental in scale as money. And so it'll be very interesting as to how it plays out, because the tech can be configured to suit, right? If we basically say, look, in a US context, we want to put, we can already rely upon the constitutional protections around government use of data, requiring due process and just cause to be able to have access to it. But we have to wrestle with how much commercial access to that data do we want to allow? And in the US context, or maybe even in a global context, the fundamental notion of the tech itself, having that availability of the data, even if encrypted, right? There is no scenario where two adversaries, whether in the commercial sector versus or government to government, would you build a system at scale that didn't allow for the data segregation? Because every security officer will tell you that encryption alone is insufficient. So I'm going too deep on this now, but you get the point, right? Which we need the framework to be able to match the architectures to the needs and wants of the individual communities, and they will be wildly different. And so we shouldn't be talking about kind of, it in grand, globally applicable constructs. There are communities where government mistrust is deeply important, failed states and even states that, persecute populations, and we have to design for that community. And then we have, countries, where where that's maybe less of an issue, and it could be a future issue. And what can we do to design, protections into that? But we too frequently treat it as some binary thing that either everybody can operate a node and therefore we're safe, from government intervention, or the government's going to run the node and everybody has recourse. And it's not binary.
Yeah, well, it's also, I mean, not just kind of, I think also at a very micro local level, people that live in the same community can have different preferences. I think one interesting example that unfortunately I think is becoming a real example, if you're a woman living in Texas and you travel out of state for an abortion, should that transaction data be available to the state of Texas if they were to issue a subpoena to the, to the company that processed that payment? I mean, there are, anyway, I think it's something we need to really grapple with and is important.
Yeah,
I would
Imran,
jump
I'd
in
be
and say-
interested to hear. Sorry, I'd be interested to hear kind of how you've been thinking about that in the different projects that you've worked on.
So we talk to many central banks and they have very different set of values. As head of partnerships, I also talk to partners who talk to central banks, and I'm hearing wildly different stories and set of values from one central bank to another. I've thought there was a consensus. The central bank said disintermediation is really bad. We want to keep the financial system kind of the way it's working, and we'll add on incrementally to not destabilize the whole thing. I've heard of central banks actually saying, no, we got to wipe out the whole thing and start from scratch. They have very different perspectives. Now, broadly speaking, that's not the objective. They care for financial stability. Now, when it comes to privacy, we've seen a very different set of values from country to country. And the way we operate that is by making sure that our tech stack is built out of the box so that it keeps information at the periphery, right? And if we design for that possibility, the policies will end up ensuring that it makes sense locally, right? So if they need to get subpoenas to go through financial institutions to provide certain information or get warrants to close down certain accounts, well, that could be done through the traditional method. But now we have debates with central banks where they say, well, wait, we're operators as well. If we're going to be an operator, do we need to go through the current method of freezing an account? I mean, we're not just regulators, we're operating it. So we might as well shut it down. We have the right to do that. Now, the ability to do so is different than having the right to do so, whether it's correct way of proceeding or not. And Jennifer and I were just talking about this yesterday. And I strongly believe that the way to get around that is to build tech that is responsibly built so that you have an approach that suits the needs of those that need to segregate data as much as possible. And we really want to ensure that our technology that we build is not used incorrectly. Like you've said, the current government in place may be very different than the one 15 years down the road. So the other thing that we need to do, other than embedding these capabilities within our technology and building it responsibly, is to develop guidelines by reputable organizations and experts that really breathes and lives privacy, understands what that means for technology, and develop these sorts of guidelines so that we as technology providers and other technology providers and other central banks can take a look at those guidelines that are seen as the international guidelines or standards to strive for, and then work from there and say, in our context, this is how we'll tweak it. And that would be a great way to start.
Can I ask you a follow-up question? I'm curious. So we're talking about governance in a way, right? Like and part of that can be embedded in technology, but probably part of it can't be, right? Like, I'm curious, like, how much of that do you think can be embedded into the technology itself versus the part that has to be left to humans?
When you deploy national payment infrastructure in a country, it's not a SaaS. It's not a software as a service where we own the whole tech and we put in the controls and they must abide by the controls based on the gateway, the doors that we open for them to interact with the machine. We actually implement it for the central bank in their jurisdiction. They have access to the system, which means technologically there's only so much we can do. We have to build it responsibly, but then comes policies and the regulatory context of the land where it's implemented.
Heidi, I want to make sure that you get a chance to speak, and then we are running out of time. So Jennifer, you started us up. I'm going to ask you to wrap us up. So
Sure, I'm not exactly sure what I was going to comment on, but other than maybe we're talking about centralized, decentralized, and that I would agree with all of the panelists here, I would take it one step further. It's not just the tech stack, but also the regulation around it is critically important. And a good example of that are the recent failings that we saw within the DeFi ecosystem. But what was unique about that situation is that the failings came about by centralized institutions within DeFi, the centralized TradFi within DeFi. And I know maybe now we have more clarity on the types of regulation we want, but I found it fascinating that here we are in 2008. I remember the arguments of we need more transparency, immutability, and sharing of balance sheets and so forth, and that didn't happen in this recent go about. And I'll just give you one last thing that I'll say from Wave Financial, because we're SEC registered and we find it very important and critical to lean into regulation. When we were approached by several of those centralized institutions who kept saying, use our platform, and we kept saying, show us your balance sheet, show us your balance sheet, show us your balance sheet, and they never would. And that right there was such a huge red flag. So I guess the last words on that would be, we need a balance of technology. It's not necessarily about centralization or DeFi, but a balance between technology and legislation and regulation.
And I'm gonna turn it to wrap us up. I think one thing that we haven't talked about that much is we've talked about privacy, we've talked about principles. How are people going to interact with this technology, and what do we need to be thinking about when we're thinking about the end user of this technology? David talked about his mom and dad. I have the same question about my mom and dad. How do we need to be thinking about users?
So I go back to kind of basic user UX principles 101, which is to design with your users, not for them. I think it's important that we understand how the end users are using money and how they're accessing money now, how they want to in the future. A lot has shifted over the past couple of years with global pandemics and war. And I think really stepping back and reassessing kind of what the needs are, how those communities that we're trying to fold into the system, and even communities that are already part of the system, want to engage, and then leading with those principles. And what I will say is it takes a lot of testing. So I know we're getting the 0-minute sign, but I do just want to emphasize that we're not going to wake up tomorrow and Dave's not going to roll into Starbucks with his CBDC, transaction to get his coffee. It's going to take a long time. The US is very much at the beginning of a research and experimentation phase. And I think really allowing space for the government in partnership with the private sector to understand the needs of the end users and then figure out what architecture actually gets you those outcomes before making a decision about what they're going to build and whether or not they're going to deploy it. So I appreciate that there's work coming out of Federal Reserve Bank of Boston that's focused on user research, and again, diving into kind of those and underbanked communities and understanding how they want to use money. And there's a much broader initiative around building a holistic framework for inclusion in the US, but we have to give space for that work to be done so that we allow those voices to be included in these design stages and not kind of inserted once the thing is out there. So that's how I'll answer that question.
And when we think about central bank digital currency, it's central bank money. If we want it to be used equivalently to the cash that we have in our wallet, it means it needs to be usable by children, by the homeless, by tourists, people with disabilities, pretty much everybody, which means you have to have different types of form factor. That's why I'm very intrigued by the work that Accenture is doing with offline payments. There's lots of companies specializing in offline payments because we need to crack that problem to be able to truly have accessible CBDC throughout a country.
Okay, well, thank you all very much. This has been a great panel. I've really enjoyed all of your perspectives.